I'm joined by Chief Executive Sir Martin Sorrell. Sir Martin, good morning. Thanks for joining us.
Yes, I don't know if it's evening or morning, but anyway, good to be here, I guess.
So, Martin, as we said, sales beat estimates. I mean, is this a reflection of the confidence that your clients have right now in the global economic outlook?
Well, I think it's the surprising thing, I think, not just for the third quarter, but the 9 months, is America and traditional media are bitten back. And when you look at that, it's probably due to a number of factors. Firstly, the stimulus that we saw post-Lehman, which has been colossal. Secondly, advertising last year. I mean, we tend to forget where we came from. Advertising last year fell to mid-1970 levels in terms of advertising as a proportion of GMP. So there had to be some form of bounce back, dead cat bounce, some people would call it. Some categories like autos, financial services, travel, retail have come back quite sharply. Media inventory prices had fallen quite sharply, so people were looking for bargains. There's also a little bit, it's controversial to talk about it, I guess, or to state it, that little feeling that online is about price and promotion, whereas traditional media are more about brand building. So those factors, I think, have enhanced confidence to do things. I think the other thing, Mark, is last year was about survival. 2009, post-Lehman, people were terrified, or clients were terrified, particularly about efficiency and effectiveness and liquidity. This year it's more about where can they grow the top line, and it's not just America, it's the BRICS and Next 11 where they've been investing.
I mean, as you said, you're in New York, and we've got a massive week coming up for the US economy. We've got GDP data today, we've got the congressional elections, we've got the Fed, which is likely to implement a further round of QE. I want to just focus on the congressional aspect, Sir Martin, if I may, because many concern there's going to be a gridlock in Congress. What are the implications of a Congress that's split and a president that many deem isn't exactly friendly to business, and possibly his inability from a split Congress to implement the measures he needs to improve the economy? Are you getting a sense of that from your customers there?
Well, I think, interestingly, you tend to have random polls or random samples in relation to answering questions of that kind. From what I hear, gridlock it almost would be welcomed by business, because then government wouldn't interfere. This is just a view, I think, that you hear quite a bit here, that government wouldn't interfere as much as perhaps they've been doing. The other point is that I think a big issue is whether the Obama administration will be pragmatic about things post the election, or still idealistic, and many people feel they'll become more pragmatic, and there are some signals to that effect. And to date, I think there has been concern that the administration regards business profits as a proportion of GMP as being almost too high. It's certainly at a high level in relation to history. And secondly, that the tax take from business has not been as great as it should be, given the sacrifices that other sectors of the community are being asked to make in these difficult times. Having said all that, we'll have to see. But there is a view that deadlock in Congress between the House and the Senate may not be such a bad thing. We have to see what the results are. So I'm not so worried about that. Removing the uncertainty, the tax cuts, or the lack of the tax cuts, or the end of the tax cuts, have caused significant degrees of concern too.
I want to get your view, Sir Martin. We've just got time for one more on the UK. Of course, you moved your headquarters out of the UK to Dublin because of the tax on overseas earnings. We did just have the budget last week. I mean, I'd be intrigued to hear your view, because 500,000 public sector jobs will be cut over 5 years, and the hope is that the private sector will, of course, mop up all those jobs, and there's also hope that the economy will just keep on growing amidst these job cuts. Do you think the coalition government has maybe gone a little bit too far? Did we need to implement such austerity in such a short space of time? And can the private sector pick up the slack or not?
Well, my personal view, it's not a company view, I guess, but my personal view is that they have done the right thing. I mean, it's a bit like taking over a company that's in dire straits, or, to be frank, where we were this time last year. We didn't react quickly enough in the first 6 months. We certainly reacted quickly enough in the second 6 months, and we're seeing the benefits of that now. I think the electoral cycle is what governs this, and I think the government have done the right thing in the early part of their term. They have a 5-year fixed term. And maybe midterm they'll start to do something about lowering taxes, personal taxes, maybe. And I think it all hangs together, and then they'll start to make the investments that they need to make in infrastructure, education and technology, which will bring growth. I think inevitably cuts of this nature is going to slow GNP growth. I don't think there'll be a double dip. But I do think getting our house in order, getting the budgets balanced, dealing with the deficits, which is another issue, by the way, in America that people are concerned about because the administration have not dealt with it in the same way, and people feel they will have to at some point in time. Doing that was the right thing. It was tough medicine, tough love, whatever you want to call it, but I think it was moving in the right direction. It will have an impact. The private sector will take up the slack to some extent. Whether to the whole extent or not, I don't know. I'd just make one other point.
Yeah.
When you look at it from a business point of view, government spending actually is going to rise, even with these so-called cuts from 700 billion to 750 billion by 2015, from 2010 to 2015. These are not cuts, actually. They're cuts in the projected rise in expenditure. So when you look at it from a commercial point of view, we were sitting and having a budget conversation about our businesses, and you said that was what you were going to do and you're running it, we wouldn't think very much of it. So dealing with these things, I think, was the right thing, right time. It won't be easy. It'll be bumpy for the next 6 to 9 months, I think, politically and generally. But I think we'll see the benefit of it in a year or two's time.
So, Martin, thanks a lot. I know it's early in the morning there. Thanks for chatting to us today.
I've woken up now. Don't worry. Thank you. Thanks very much.
Thanks very much to Martin Sorrell there, Chief Executive Officer, WPP.